Problem 9. The name of the insurance company is Global Insurance Company. Global Insurance Company. Form B, that is BPS. Balance sheet as on 31st March 2013. 31st March 2013. Okay. Keep a little, make another table below this, or I can use this itself for the contingent liability. So this I'll keep for the contingent liability, and directly I'll start with schedule 5. Schedule 5, share capital. Now they told us here they've not given us the authorized capital, but we just write the authorized capital and we put it as dash. We can have not put it as nil because there is authorized capital. Only thing we don't know about it. When we say it as nil, that means we are acknowledging that there is no authorized capital, which cannot be true. Only thing we have not been given the information, so we put it as a dash. There's a dash difference here between a dash and nil. Okay, so don't put it as nil. Then we have issued, subscribed, called up, and paid up capital. Now they have not told us anything about the shares and nothing of that. So they've just said equity share capital 30,000. So I'm just going to write it down. Okay, they have not told us how much is the how many shares and what's the face value. Nothing has been told. So I'm just going to write it as 30,000. Next is schedule 6, reserves and surplus. We have just one item here. That's the balance in profit and loss account. Balance in P and L account. That's the only item that we have here, which is 1802. 1802. Next is schedule 7. I don't think we have anything under schedule 7. Okay, we didn't come across anything under borrowings. So we directly move to schedule 8, which is investments. We have some 3-4 items here. So we have government securities with our RBI, government securities with RBI, which is 3,700. Then there is Indian government securities, which is 1,02,000. Then there are debentures of public bodies, which is 40,500. Shares in joint stock companies. Shares in joint stock companies are 22,500. So the total count here comes to 1,68,700. 1,68,700. Then we come to schedule 9. We have one item here, that is loans. Mortgage debtors loans. Mortgage debtors / loans, which is 7,500. Now if the same, now what if you check the problem, they have put it as mortgage debtors / loans. In brackets they have put as debit. Okay, in brackets they put it as debit. Now the same thing they had given as mortgage loans or something like that, and they had put credit, I would have taken it under borrowings. So it would have come under schedule 7. So loans It has depends whether it's a liability or an asset. If it's a loan taken, it becomes a liability. If it's a loan advance, it comes under loans, which is schedule 9. Then we have schedule 10, which is fixed assets. And under this, we have two items. One is there is no depreciation. We just have the assets, furniture and fixtures. Furniture and fixtures, which is 3,800. And we also have premises. Sorry, not premises. Land and building, which is land and building. The total is 50,050 rupees. 50,050 rupees. So the total here comes to 53,850. 53,850. Okay. Next we move on to schedule 11. Schedule 11, which is cash and bank balances. We have two items here. We have cash in hand and cash at bank. This schedule will have only these two items. Okay, cash in hand, cash at bank. 350 and cash at bank is 7480. The total comes to 7830. The total comes to 7830. Next, we have a very lengthy schedule. We have a number of items here. Schedule 12, which is advances and other assets. Schedule 12, advances and other assets. Now we need to see what are the items here. We came across a number of items. First thing we have is agents balances. Agents balances, which is a debit balance. That's why we are taking it here. Credit balance would have gone under other liabilities, current liabilities, sorry. Agents balances, then interest accrued but not received. Interest accrued but not received, which is 2250. Then we have due from insurance companies. Due from insurance companies, which is 6450. Then we have stock of stationery. Stock of stationery. Stock of stationery, which is 140. Then there is advance payment of tax, 3,000. Then we have sundry debtors, and to this there is an adjustment. So sundry debtors given to us is 4,500, and there's also less provision for bad debts. We don't take this provision for bad debts under provisions, but we show it as like how I explain RDD. Okay, less reserve for doubtful debts, which is 2,000. So this total here comes to 4,500 minus 2,000 comes to 2,500. Then we have outstanding commission receivable. Outstanding commission receivable, which is 4,500. And the last that I'm going to show is the TDS. The last thing that I have to show is the tax deducted at source on interest and dividend. Okay, now we've got four items here. We have four items here. We have fire, marine, accident, and general. So I'll write all those down. Fire, marine, accident, some accident insurance, and general insurance. Fire, marine, accident, and general insurance. Okay, now please pay attention here. Now they have told you the interest and dividend received is 2340. I was just telling you, whenever you receive interest, whenever you receive dividend, or you receive salaries, or you receive any income, the income that you receive is the income after deducting the TDS. Okay, the income that you receive is the income after deducting the TDS. So basically they have told us here the TDS is 25%. Okay, so I'm going to do a small calculation, like a kind of a working note. This is for your understanding. Assume that the total interest is 100. Okay, assume that the total interest is 100. They have told us the TDS is 25. That means if the total interest is 100, 25 rupees goes towards TDS and 75 rupees is the amount that you actually receive. Okay, so that means the amounts that are given to us, the interest that has been received, interest received is 75. Okay, what they have told us is interest and dividend received, TDS at 25%, and that those amounts that have been received are basically, if we take it in this example, assume the total interest is 100, TDS is 25, interest that is received in 75. So we need to calculate what is 25% of that. We need to calculate what is 25% of that. So trying to do a simple calculation, if I do a simple calculation, it's going to be something like this. It's going to be, in case of say fire, okay, the amount that is given to us is 2340. The amount that is given to us is 2340. If you check the problem, basically this amount, I need to know how much is 25%. Basically this amount is 75 of the total 100. If we take it in this proportion, this amount is the 75% component. I need to know how much is 25% of. I need to know how much is 25% of. Okay, so again I'm explaining this calculation. Why I have done this? Because they have told us 2340 is what has been received, but I need to know how to calculate that TDS percentage, which is 25%. I can't say 25% in 2340. No, that would be wrong, because this 2340 that I have received is after minusing that 25%. So I need to know what is that 100%. Okay, so what I've done a simple calculation. I've taken total interest as 100. Out of 100, TDS is 25. Okay, and interest that is actually received is 75. So transferring this to my example or to my problem, 2340 is the interest dividend that I have received from fire insurance. Okay, and 2340 is the 75% component. I need to know how much is the 25%. So how do I get this? I basically do 2340 into 25 divided by 70, cross multiply. 2340 into 25 divided by 75, and how much do I get if I do that calculation? I basically get an amount of 780. I basically get an amount of 780. Okay, so basically 2340 is the actual interest that I have received. 780 was the TDS that was deducted by the company that was paying me that interest and dividend. So if I wanted to see the total interest that I have earned, it will be 2340 plus 780. That will be my 100. 2340 plus 780 would be my total interest that has been received. Why I had to do this calculation? Because the 2340 is just 75% of the total interest. How do I know it's 75%? Because they pay me the amount after deducting the TDS. I'm paid the amount after deducting the TDS. Similarly, the same calculation applies to marine as well. So the marine, the amount that has been given to us is 750. So I'm going to do 750 into 25 divided by 75. This is going to give me an amount of 250 rupees. 250 rupees. Then I have marine, which is 360. 360 into 25 divided by 75, which is going to be 120 rupees. And finally, the general one is 2400 into 25 divided by 70, and that's going to give me 800. So my total TDS that has been deducted on all my interests is these four amounts put together, which is 780 plus 250 plus 120 plus 800, which comes to a total of 1950. 1950. This calculation I've done just for you to understand. This calculation is done just so that you can understand why I've taken 25. Because sometimes some of you may what you may do is, since they've said 25%, you may just take 25 divided by 100. But I can't take, when it would have been 25 divided by 100 if they had told me the gross amount. That time it would have been 2340 is for 100, for 25 it is how much? And that time we would have got 2340 into 25 divided by 100. But right now I don't know the gross amount, I know the net amount. They have paid me the amount after deducting the TDS. Okay, they paid me the amount after deducting the TDS. So basically this is at 75, at 25 it will be how much? Okay, and then we get a total here. The total of this is 42490. 42490. Is that clear, everyone? I hope this is understood. If it's not understood, please ask me. I can explain it again. If it's not understood. Any questions with regard to this? Any questions? It's just a kind of a proportion calculation that I have done. It's just a proportion calculation that I have done. Next, I move on to Schedule 13, which is current liabilities. If anyone has a question with that calculation, please type it in the chat box, or you can turn on your audio and ask me. Current liabilities. Now under current liabilities, we have some items. First is unclaimed dividends, which is 850. Then we have due to reinsurance companies, due to reinsurance companies, which is 3450. Then we also have sundry creditors, which is 7250. Then we have a deposit and suspense account, a credit balance, which is 2280. Then I think I think that's it. We have outstanding commission payable, outstanding commission payable, which is 3,000. Outstanding commission payable is 3,000. And we also have another item, that is outstanding claims. We also have another item, outstanding claims. Outstanding claims, which comes to, we have got three items here. We have three items here. Fire is 20,000. Then we have marine, which is 5,000. Marine, which is 5,000. And we also have a third one, accident, 3,250. Accident is 3,250. So the total of this comes to, the total of this comes to 28,250. So the total here will be, 45080. 45080. I just realized I missed one item here. There was another item which is outstanding. It was on the next page and I didn't see it. Outstanding premium. The amount is 8,200. Okay, but the total is correct. 42,490 is correct. 42,490 is correct. Okay, so that's schedule 13. Just add this item in case anyone is solving along with me. So that's schedule 13. Schedule 14, the last one that we have in this problem, is provisions. Schedule 14 is provisions, and under this we have provision for unexpired risk. Again, we have three items. Provision for unexpired risk, okay, which is fire. Then we have marine and accident again. Fire, marine, and accident. Fire is 88,125. Marine is 102,250 and accident is 13,113. So the total of this comes to, the total of this provision for unexpired risk comes to 2,03,000, 2,03,488. 2,03,488. I will stop here for now. I will do the balance sheet in the next lecture because we won't have much time and I don't want to hurry up with it. So we will do the balance sheet in the next lecture. Is that clear?